and that they save a couple of shekels. But what people don't know about Irina is how much she loves to help people in her own modest and quiet way. Sorry for exposing you. Ladies and gentlemen, we want to ask Irina Galou from Innovative Accounting Solutions to please come up and say a few words.
Hi, good evening, everyone. I guess it's quite easy now to go after Alvin because I saw the expression and everyone, I don't think a single person understood what he's talking about, but I think we all need to start understanding what it is he's talking about. Because just yesterday, funnily enough, I had a consult and the client called and said, listen, you're the third accountant I'm calling. I said, okay. I'm putting together an exhibit. I said, okay. It's NFTs. Do you know what an NFT is? And strangely enough, I do. Can you tell me about tax consequences? Is that where you're going? Is that the question? So it's actually quite interesting, and I'll get to that in a second, but NFTs are an interesting new thing. I don't understand the technicality of them. I could not explain them. But as I explained them to my client, I said, so tell me, who are you? Are you an artist? And she said, yes. I said, great. So when you're receiving payment in Ethereum, we've got ordinary income, right? Like any consultant, like myself, we've got ordinary income. She said, great, but I want to sell the Ethereum tomorrow. I said, wonderful. Now you've got capital gain. So she says to me, I don't understand. I've got 2 transactions in one? Yes, you do. So she's an artist. She's actually paying taxes on ordinary income. If she's maintaining Ethereum in her account, right? Nothing's happening. The second she decides to sell that cryptocurrency or exchange it for anything else would trigger a capital gain transaction. Which is different from you guys purchasing NFTs, right? Because what do? In order to purchase NFT on OpenSea, we need to have Ethereum first. So A, we've got the basis in Ethereum. We purchase the NFT, that's our basis. Correct? The moment we purchase that NFT, there is a capital gain on those transactions. And then once we sell the NFT, it's like selling a collectible. Depending when you sell it, you've got a gain again. So it's a whole different topic. I wasn't planning to address it by any means today. I didn't realize that we're discussing NFTs. But it is complicated, but it is out there, and I guess we all need to get familiar with it because this is the new world we live in. It's becoming virtual. People are purchasing virtual property. People are buying virtual plots of land, and there are tax consequences with all of that. But this wasn't actually anything that I was going to address today. One of the items I actually did want to address with you guys is the past 2 years have been brutal for businesses. They have been brutal in every single respect, and I wanted to address, and I know many people have been asking me throughout, are there any programs? Are there any rebates? Are there any credits available to small businesses? We're good here? Still foreign? Still foreign? No, not so much. Okay, so back in March of 2020, with the CARES Act, businesses received Paycheck Protection Program. I am not going to go into details because that's already said and done, but I do want to bring up one item. IRS deems forgiveness of that income and it's tax exempt. So if you receive Paycheck Protection funds, you apply for forgiveness, and IRS forgave all of those funds, that is tax exempt to you. Both rounds. Round 1 and round 2. At some point later on, there were SBA IL grants given to businesses. Up to $10,000. Anyone receive those? Yes. Those are tax exempt as well. So SBA grants are tax exempt. There is no tax on the federal or state level. Then came New York State and New York City grants. Funnily enough, everyone received the 1099 for that one. The Those are taxable on the federal level. Everyone's asking about SBA loans. SBA loans have been around since last year. The initial batch was at 150. Ultimately, businesses were able to apply and to increase it up to $2 million. Great opportunity for businesses to tap into those funds. They are at 3.75%. The repayment is 30 years. It's all great as long as you use it for business. I get daily questions, can I take the money and buy an apartment in Miami? No, you can't. It's specifically prohibited in your loan documents. Daily question. I have a medical practice and I just got $2 million. It's for 30 years. I really don't need the $2 million. Can I buy a building? No, you can't. But why not? You signed loan documents that said this SBA funds are specifically for you to maintain your business, not to expend, not to invest, not to take the funds out and purchase units, to maintain your business. So for any operational expenses, no problem. Salaries, no problem. Rent and marketing, no problem. No purchasing of apartments, please. These loans will be reviewed in depth in 3 years.
These rules and regulations.
I promise you, I know it seems like it's been wild, wild west. Things will come down. These loans will be reviewed.
Absolutely.
So we've got that. Now that that's out of the way, I just want to kind of address one topic that's been my favorite lately, and many people are not aware of this one. Employee retention credit. Anyone aware? Guys, how many of you have small businesses and have employees? Great. Who else? Are you guys familiar with retention credits? That's not a good thing. So everyone was very familiar with PPP because it was very publicized. In reality, for most businesses, employee retention credits wind up being better than PPP. Reason being is, when original Paycheck Protection Program came about, you had to make a choice. You're either taking PPP funds or you're applying for retention. IRS revised their position and said, even though you're applying for PPP funds, you can also apply for retention credit. What is retention credit? In 2021, if your business had employees and suffered a decline, you can receive up to $7,000 per employee per quarter. The credit was active for the first 3 quarters of 21. So technically speaking, if you have an employee that makes $20 an hour, it's a $40,000 employee, IRS will cut you a check back for 7,000 times 3, $21,000. There are qualifications, obviously. It's very easy to qualify if your business had a drop in revenue of at least 20%. That's a definite qualification, and you don't need to go any further, your business qualifies. Even if you made more money in 21 than you did in 19, but your business was impacted by a governmental shutdown. In New York, half of businesses were. Every business qualifies for this credit. It's easy, you apply, you send it to IRS, and they send you a check back. $7,000 per quarter per employee for the first 3 quarters of 21. For 2020, the credit was up to $5,000 per employee for the entire year. There is no deadline to apply. You can right now go back, amend your payroll tax returns with IRS for 2020 as well as 21. You will be receiving credits back. The only problem, not a problem, but you should really put your current tax returns on extension because you should include those credits as an offset to your income in your current. But it's a great credit. They are processing them. There is a lot of guidance around it. But generally speaking, if you qualify on the 20% income decline as compared to the same quarter in 2019, meaning COVID, pre-COVID quarter, great, you're in. Even if you don't have a decline, but your business is more than nominally impacted, you're good to go as well. As long as we have a governmental order in place. And it's easy. We had a situation where normally a law firm would not qualify for this because, in essence, they were able to work and no one technically shut them down. When you really dive down and understand that that law firm derives 30% of their income from litigation and courts were closed, IRS considers that partial shutdown. They're eligible for the credit. So it's really on a case-by-case basis, but most businesses qualify here. So just wanted to kind of wrap this up. I know we spend a lot of time, and my firm spent a lot of time with healthcare providers, and we applied for HHS grants. There were different phases of grants available. Those are taxable as well, because those are considered income replacement. So if you receive HHS grants, those are taxable. Restaurant grants by SBA are not taxable. EIDL as a loan is obviously a loan, so there's no taxable income or there's no taxable repayment. The IO grant that was received of $10,000 is fully tax exempt. So I hope that sheds a little bit of light on the latest COVID provisions in the IRS rules. And I hope that makes it a little bit more understandable. If you guys have any questions, I'm around.